Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no hype, mission focused channel trying to find you exceptional companies and unrivaled investments. A lot of folks saw their portfolios drop by a couple percent today. At one point, the indices were down something like 3%, and folks are asking, wait a second, why is it declining? And more importantly, what should I do next? And so, in this video, I want to do a quick, super fast overview of all the negative headlines that are out there right now, the things to consider, how bad could it get, and what I'm personally doing. What am I personally considering? So as I look at the negative headlines, one of which is Evergrande. I already did a video on that. China's Evergrande, where they have something like 300 billion in liabilities. That's literally half the liabilities that Lehman Brothers had on their balance sheet when Lehman Brothers defaulted, went bankrupt. And so here it is, seeing Evergrande, this huge behemoth in China's real estate sector, blow up, default this week. That's sending shockwaves and making investors broadly concerned, like, wait a second, could this have some sort of contagion effect? Could this have some sort of domino effect where maybe there are some international banks that are invested in Evergrande's debt, and then maybe this hurts other Chinese banks? Maybe this spirals out of control. So that's one big risk that a lot of investors are now mindful of, even though in all honesty, this has been a slow moving train wreck over several months. This is not like an overnight, like, oh, I'm shocked. Like, it's been very clear that they've been in a troubled situation for a long time. I mean, look, I even called out Evergrande last week. It's not like it was, oh, here's a shock. The next thing I would argue, and Dr. Michael Burry even tweeted about this, was that there's actually a risk in terms of seeing some sort of various different crypto assets potentially blow up, such as the stablecoin Tether, where they might be taking some of their assets and buying commercial paper with it, effectively saying, yeah, we're not telling you exactly what supports this stable coin, setting at, let's say $1 per Tether. And that creates this sort of risk of like, well, wait a second, if these assets are in higher risk Chinese commercial paper, is it possible it actually comes unhinged? And what if that becomes leverage from there? So there's also that uncertainty. What if you have some sort of crypto market blow up as well? So you're sort of seeing that in some of the crypto assets taking a hit as well. Another aspect, you have Janet Yellen, Treasury Secretary, talking about Congress, you need to get your act in order. We have this debt ceiling. If you do not raise the ceiling in time, it could have catastrophic effects for America. I mean, she's literally said permanently weaken America. So those are her words, things to consider. These are the headlines that are starting to spook investors. Another aspect, which is broadly known at this point, it's not like an overnight, like, oh, wake up, I'm shocked, is the tapering, where, Jerome Powell, the head of the U.S. Federal Reserve, said, you know what, we've sort of where we want to be on inflation, where we want to be on employment. So this massive, radical quantitative easing that you've seen the last better part of this past year, 120 billion a month, they're going to start tapering. That doesn't mean they're going to be reversing those purchases. That just means they're going to be slowly declining the amount in which they're purchasing. So you might get this taper tantrum. So you see all these different things, layer on the risk that maybe inflation picks up, layer on the risk that that valuations are generally very high. You look at you look at bonds and junk bonds and how they're yielding, low single digits. The risk reward is incredibly not compelling. And so you see all these headlines, and the reality is there will always be devastating negative headlines that you consider. I mean, right now it's particularly bad, I'd argue, but there will always be bad headlines. There will always be negative news that you have to digest. And so the question first is, well, wait a second. So I'm seeing my portfolio drop a couple percent. How bad can this get from here? And I think the answer is that you always need to consider, what does the leadership do? Because this is not predestined to happen. It depends on what are the people doing that are affecting change. For example, you look at Evergrande, and do you think the Chinese Communist Party is comfortable with seeing the spiral out of control? Let's say Evergrande goes bust, then it leads to several state-owned banks going bust. Do you think they're going to allow that to happen? So that's the question of like, well, wait a second, at what point do you see the People's Bank of China really step in? You've recently seen it in the last few days, saying, hey, we're going to make a little bit of an infusion, a few $billions, effectively reverse repo. But you're not really seeing this huge, like guns blazing, break out the bazooka of tens of billions of dollars equivalent. You're not seeing that yet with the People's Bank of China. So then, another aspect that, consider is like, okay, so you have leadership. Let's also consider the leadership, for example, with the debt ceiling, which Janet Yellen's saying catastrophic risk. Once again, do you think U.S. has reasonable leadership? that is a risk. Like, will there be sensible leadership step up and say, yeah, we can't cross this line? That would be really dumb of us. Lead to another ratings downgrade and cause the market to drop significantly, precipitously in short order. The QE, looking at the tapering, that's another example of leadership question. How fast do you think Jerome Powell is going to say, hey, we need to slam on the brakes in terms of quantitative easing? So far, all the data has been like, this is going to be really slow. Don't worry about it. So these are the different points in which to consider. It's always through the lens of leadership as you're looking at this. So I can't predict, this is going to drop 20, 30%. No, I do recognize that valuations are historically very high. So if you have a bunch of poor missteps by leaderships, no matter where you are, whether it's in China or the US, you do have that risk just because valuations are so elevated. And I can make a whole separate other video on valuations being elevated if you're interested. But it wouldn't surprise me if you have a series of missteps that you do have significant downside. But once again, it depends on what does leadership do. If the Federal Reserve is like, given heightened geopolitical concerns, we are going to taper slower, that would be good cause for folks to say, hey, risk on. And so that is something to consider. Now, what can you do as an investor when you see a painful day like today, watching your portfolio drop? So I'd argue stick to your game, focus on one company at a time. Look at one company, size up, and that's the name of this channel, Unrivaled Investing. Are they unrivaled? Are they doing something special? Because that gives you a sense of, will they be bigger 5 years from now? Are they growing? Then you think about what's the risk reward with that valuation. You do some sort of hypothetical framework. What's the risk reward that you're playing for? So those are the types of things that I would consider doing. Sticking to your game. Just because something's down a little bit doesn't mean you should also, oh my god, I panic sell, or this is automatically time to buy. What you should do is, once again, look at one company at a time saying, does this make sense? Do I like the risk reward at this price? Now, I, for example, recently did a video on CVS, which Dr. Michael Burry has also been buying, effectively calling out that I think it has a 10% free cash flow yield to shareholders starting in 2022. So like, hey, there aren't that many companies that have maybe mid to low single digit growth plus a 10% free cash flow yield to shareholders. That'll either be through dividends or buybacks. So I'm looking at that and saying, hey, that strikes me as pretty compelling. I called out to Unrivaled Investing Journey subscribers a play sort of related to CVS that I think has even more upside potential that's got my interest and that I called out as my potential multi-bagger. But for that, you do need to go to unrivaledinvesting.com. If you are interested in following my personal journey, go to unrivaledinvesting.com. If this video has been helpful for you in terms of talking about why is the market going down, how bad could it be, and sort of what should you consider doing with your own game, if this video has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up. Thanks so much for watching.